Hey guys, Corey here. Welcome back to the channel. If you guys are enjoying the content, if you're really feeling generous, you can give me a thumbs up as it greatly helps the channel grow. The reason I started this channel, and I've said it before, I have a Bachelor of Science in Finance or bachelor's degree, and I also studied psychology and data analytics, and I've spent the last 7 years in the stock market, and I'm currently working on my Juris Doc. So I have a lot of education in finance, analytics, and experience in the stock market, as well as some of the legal sides of it too. And I really wanted to help everybody out in order to have more financial freedom, because this has really given me the chance to enjoy my life. I enjoy doing it. I'm very passionate about it, but it's given me financial freedom. But the market is very hard to learn. And to be quite honest, it took me at least 2 to 3 years just to stop losing money. And I want to help shorten that curve so you guys can learn a lot faster and have financial freedom. I want you guys to be able to enjoy life the way I enjoy life, trading options and stocks and investing, so that this way you can have a more secure future and possibly retire early. And one quick thing before we continue, I'm no financial advisor and this is not financial advice. What I'm doing is teaching you strategies and risk management and helping to guide you on how to implement different strategies in order to be more profitable, which stocks you'd like to invest your money into and how much of it you'd like to invest. And of course, your risk management is truly up to you. I'm just trying to help coach you and mentor you on the strategies. Today, we're talking about the absolute best strategy that you can run in the market, and it is the safest strategy. There is nothing safer than selling put options. So the reason why put options are so safe is because 1, you're picking the stock. 2, you're picking the strike price. So you're picking the stock and you're picking the strike price at which you'd like to get into this stock. So there's no risk. You have full control over what you're buying and how much you're buying it for. And then if you get assigned, you don't lose any money. You're just buying the stock you already wanted. And then beyond that, if you decide you don't want to get assigned at the strike price you're selling the option for, and the stock price falls below the strike price, and you just don't want to get assigned, you can go ahead and roll that option further out in time at a lower strike price and collect more premium. Yes, if the stock price goes below your strike price, you get to keep the full premium. You can roll the option out further by a few weeks or even months to a lower strike price so that you're surely not to get assigned, and then collect even more premium while doing it. That's why selling puts is the best strategy in the market and the safest way to make income. And for example, if you were to sell a credit spread, which is a subject for another video, which I've already done, and I'll put that video right there on the top of the screen. If you sell to open a put credit spread and the stock price goes below your strike price on the credit spread, you lose money and you can't get that money back. However, selling cash secured puts on your favorite stock, if the stock price goes below your strike price and you decide you don't want to get assigned, then you can just roll it out and roll down. For example, if you're selling a $25 put and the stock price goes to $24.75, you can roll out 1 or 2 extra weeks and down to 24 and collect more premium. You can't do that with a credit spread. So selling cash secured puts is the safest strategy you can implement into your portfolio. So let's say you're trying to get into Palantir and the stock price is $22.95 and you sell a $22 put option. You get to collect a premium. So if the strike price of Palantir doesn't fall below the put option strike price that you chose, you get to keep the premium and sell another put. And you can do this a few weeks in a row, and then when the stock does eventually fall below your strike price, you can either roll it further out and lower for more credit and just keep making money this way, which is very good, or you can let yourself get assigned. This way you own the stock and you got in a lot cheaper. Then you can go ahead and start selling covered calls to collect even more money. I have done a video on covered calls right there. I'll put the video at the top of the screen. This way you guys can watch that and learn what to do once you're assigned and you enter the stock. So let me go ahead and show you guys an example of how to sell a cash secured put. So a couple of stocks that I want to show you guys that we're going to run some put options on is Bank of America, which is a very good stock, Lyft, and Palantir. Palantir is a tech stock that has government contracts, so they're very bullish for the future. Lyft has done really well on earnings for the past 3 quarters, and they're very bullish as well. You guys can see the staircase here going up. And Bank of America is one of the best financial stocks you can get into. It's a dividend stock. It has very low volatility except around earnings. And you can see even over a 6-month window, the price hasn't moved but $7, and it's mostly around earnings and dividend dates. The past month, it's only moved $2. So very safe stock to sell puts on. Let's start with Palantir first. We can see that since earnings on February 7th, the price has not gone below $22. And right now the price is at $22.80. So we would start by selling a put option at the $22 mark. Anything below 22, automatic buy for Palantir. If we get assigned at 22, I would be totally fine with that. I've sold a couple of 22 put options over the last couple of weeks. I have not been assigned. They expired worthless, unfortunately, because I actually wanted to get into the stock. The price hasn't closed on a Friday below 22, so I'm not getting assigned on that. And to be honest, it's going to be kind of a low chance to get assigned below 22 on Palantir. I don't see it going below 22, but you never know. Anything can happen. We're going to go ahead to Palantir and we're going to click on sell, click on put. Works with any brokerage. My expiration date is April 12th. If you're watching this in the future, you can set it to any date you want. Doesn't matter. Same strategy. Going to click on sell $22 put here. 78% chance of success, 24 delta. Anything between 20 and 30 delta is great for cash secured puts. Unless you don't want to get assigned, you want to be below 20, like maybe 10 to 15. Going to collect the $22 premium. Going to click it up to 23 because I want to collect the maximum amount. And when the stock market opens, it could drop a little bit. And therefore, I might bump it up to even 24, 25, but you just click review order. There's your cash collateral and you collect that juicy premium. Do I want to sell these puts? Oh, I'll take your money to get in. Sounds like a plan to me. $23? I'll take that. Cool. I'll get in. Let's go. No, I'll do this every week. I'll take your money every single week. That's okay with you, right? Oh, you're even giving me an advance on next week. All right, $23 more for next week. On Bank of America, I would say the best price to go with would be $36.50, maybe even $37, but with earnings coming up, $36.50 is very safe. Maybe even $36, but there's no real premium there. So we go to $36 and it's $12 premium. $36.50 is $23. I personally would sell $36.50. It is a much better sell because there's more premium. And Bank of America is not that volatile. You can see it's 27%, which means it's 25% below the average or 23% below. So here we go looking at 37, and that is a 44 delta, a little bit higher, a little bit more risky. Bank of America could close below, but if you want to buy the stock, no big deal. Personally, $36.50 is what I would sell. Click on sell put, click continue, click on 24. It's between the bid-ask spread. If you notice, Bank of America has got a very tight bid-ask spread, which is great, and lots of open interest and a ton of volume. So 24, you'll get filled like almost for sure instantly. Click review order. There's your cash collateral, and then you'll collect the $24 juicy premium. Oh yes. And it's very easy income. Another stock that I like to collect premium on, and I've done this a few times, is Lyft. You can see I sold a $12 put. At one point, I sold a $15.50 put. And at one time, I actually sold a $17.50. Right now, $17 puts are in order, maybe $16.50. And $17.50, not a good idea right now because the price is below $17.50. $17's also pushing at $16.50 is safer. However, there's a good chance Lyft just stays above $16.50. If you want to take the risk, $25 is what you would get. However, I would sell a $16.50, which is a lot safer, 83%. Click $16.50. The bid-ask spread's very tight, lots of volume and open interest. Click continue. We're going to sell it for $15. We're going to want to go for the ask price. Want a nice even number, $15 juicy premium. Click review order. You get a $1,650 cash collateral, and we sell that put. Another stock that I love selling puts on because there's a lot of volatility is Affirm, but you have to be careful. Affirm will move anywhere from $2 to $3 or even $4 in a day quite easily. Last couple of weeks, this hasn't happened, and we're pretty much at a solid support right now. The price has been above 32 for a while. However, it could go down to $30 or even $28. So you got to be careful with Affirm. However, we go to the 4-hour chart, you'll see that there's a lot of support at 33 and 32. So to be safe, selling a $32 put is a little bit on the aggressive side, but you could do 31 or even 30. Let's go over to Robinhood here and let's pull up sell puts April 12th. Now we could sell a put for 32. The delta's 37, quite high, but the premium is very high. We could get about $91 for this. And we could always just keep rolling out. So if we get in a bad position on this, we could roll out 2 to 3 weeks and down to 30 and still collect more premium. So you could take a little bit more risks with the deltas. Now, to be safe, 31.50 is not much safer. 31 is definitely safer because of that support at 33 and 32. But really, 30 is very safe. 30 is a 17 delta. You could sell this all day and you could collect a very nice premium of about $35, and you could do this every week. And the chances of Affirm going to $30 is very low, like quite low. Considering earnings is coming up, very, very low. And the delta is only 17. And the stock price would have to drop almost $4 in 5 days. And even if that did happen and it went to $29.50 or $29.80, you could just roll it out another week and down to $27 or $28 and collect another premium. It's a very safe way to making money, to selling options. Selling puts is the best, and it's my favorite strategy. So we collect this juicy premium, $3,000 collateral, collect $35. It's like a 1.2% return per week. You could go a little bit higher, a little bit more aggressive. So we could sell a $31 put, and with a delta of 26 and volatility at 82% or 83%, because it's a cash secured put, and we can roll it out and just keep rolling and rolling for credit, and there's a lot of support at 33 and 32, I have no problem selling a cash secured put at $31. But let's check the Bollinger Band. Let's see what it says. Well, the Bollinger Band on the daily chart, 96% chance if we sell a $31 put. It says here the bottom is $31.66. And based on the Bollinger Band standard deviation of 2 and length of 20 says that we have a 96% chance the stock won't go below $31.66. So if we sell a $31 put, we have a 96+% chance of success. So let's go ahead and do that. We got the 96% chance there. Our delta is below 26, meaning Robinhood thinks we have a 75% chance, and we have a lot of support on the stock at 33 and 32. So everything's pointing to 31 being well below that, and we can collect $56. So we'll do that. That's the best one. $3,100. So we're looking at just under a 2% return in a week, which is really good. That's 8% per month, and it's very safe. Now, if you're kind of aggressive and you really want to go for those aggressive plays, you could do that. You could go for a 31.50 or even a 32 because we've already done the research that 31 and 32 are like rock bottom for Affirm. Considering the price is at 33.47, the Bollinger Band says 31.66. You could get away with selling a 32 if you wanted to. Click on 32, click continue, sell it for 91. So this is a 3% return per week, and that's a pretty high return, especially for a volatile stock like this. You do this 4 times in a row, and you're netting a 12% return per month. That is 120% per year. And if you get assigned, you get to own the stock. If you don't, then you just keep collecting the premium, and you can keep rolling it out further in time at a lower price if needed. Let me show you an example here of what it looks like on Robinhood with the put that I sold on Upstart. You can see that even though the price of the stock is below my strike price of 25, I still get to keep over half the premium, 2/3 of it. However, if the stock price just barely goes above 25, look what happens. At expiration, it expires completely worthless. See? However, where it's currently sitting right now, it's going to expire at $35. So what we're going to do is we're going to go in here and we're going to roll this position. I'm going to roll it from April the 19th out to May 3rd, give myself 2 more weeks, and then I'm going to go down from 25 to 24. There we go. And I collect another $23 credit. I'll go to 25 because I'll get filled at 25. There we go. Review order. I can buy the old put to close, sell the new one to open, simultaneously rolling the position. So all I have to do is click submit. And once it's filled when the market opens, I collect another $25 premium and I get to lower my strike price to 24. And if you keep doing this, eventually the stock will stop going down. It will go up and then it'll expire worthless and you can just keep collecting the premium. But selling puts is the best strategy that you can implement into your portfolio. That's going to do it for today's video, guys. If you enjoyed it and you haven't already, be sure to subscribe and be sure to give me a thumbs up and tap the bell so you guys know when I post new videos. It helps the channel grow. If you have any questions, I do my best to answer every one of you guys one at a time. So be sure to leave them in the comments below as I take pride on helping you guys out and answering all of your questions. I will see you guys on the next video. And remember, let's grow our wealth together. Take care, guys.